So the algos had a red day today. Of course, that is to be expected. It is part of any normal trading system. There will be periods of drawdown and periods of run up. The idea is for those periods of run up to be longer and stronger than the periods of drawdown. So far, I have not had two red days in a row, but that's coming at some point, of course. So let's just talk about the setups today, see what exactly happened, and talk a little bit about maybe if there's something that we could do to make them a little bit more effective or to avoid some losing trades. So, of course, at this point where this trade triggered, this is a long trade. Even now, we have a series of lower highs and lower lows, right? So we have high, low, high, low, high, low. So should we be looking for a long? Based on the statistics of this trade setup, it goes long when the market is low. I would say yes. I think this is a perfectly good trade. Notice here that I end up buying the closing price of a bear bar. And that seems, I'm going to add this as a parameter in the strategy, but it seems from just the last couple of weeks that the trades end up working better when I'm going long after a bear bar and short after a bull bar. So we're going to test that theory out. Even if it doesn't increase the win rate, it may allow us to use smaller stops, because you can see here we did not really have to have much of a stop at all. If we had done that here, let's say going long here at the bottom of this bear bar, we still would have ended up losing the trade, but perhaps with a smaller stop. So that's set up one of the setups from today that ended up losing one and winning one. So that one ended up basically being break even, minus $50, $60, something like that. And then this is our next strategy, the other trade, which ended up losing. Basically, this trade is looking for a reversal. So the indicators are pointing down, but we know most days do not trend. So we're looking for the market to reverse, and you can see it's still, struggling to do that. But, we had somewhat the right idea here. At this point, the market does start to consolidate. So we didn't get that reversal, but we are definitely consolidating at this point, struggling to put in new lows. One thing that I find really interesting about this particular strategy, however, is this right here. So I went and did some analysis this morning to do with another strategy, other questions that I had, but I ended up stumbling upon the fact that this particular strategy does very poorly on Tuesdays. So it takes a very high number of trades on Tuesdays. This is over the last 11 months. In fact, let's just make it a solid year here, and we'll see what that looks like. While this is loading, I saw it over, so there we go. So Tuesdays, not great. Wednesdays sort of broke even there, so probably not worth it to try and disable it there. But yeah, Tuesdays did very poorly. So if you were to take Tuesdays out over the course of an entire year, our drawdown would have been much lower, and our total net profit would have been quite a bit higher. So yeah, something interesting that I would like to look into, just to see if it's possible that would help. So going to program that into the strategy and maybe look back even further to see if that is just an anomaly for this particular year, or if it would be actually useful. So yeah, so that's it for today. Red days are to be expected. I'm not really worried about it. We'll be back again tomorrow running the same strategies. And yeah, that's it. Thanks for watching. Stay tuned.